Hey, Urgent Alert Traders, Wiz here with your with your weekly trade for the week, along with our portfolio review. Really good week this week here at TGO. Man, we Tuesday in the primary live trade brief, we nailed it. I told you guys. I said this on Monday, didn't I? With the roundtable. Out of the 5 traders, I think 2 of us were right, or I was right, or whatever it was. I said this is a BTFD. Nobody gives a shit about healthcare. It's like that chief investment officer from. No, it wasn't Double Line Cap. Whatever he said, one of these huge hedge fund CIOs said, "Who cares about healthcare? Poor people care about healthcare. Market cares about tax reform, regulation, and infrastructure spending." It was a "let them eat cake" quote, and he's right. But that's another reason. Some of you ask, like, "Well, Wiz, why'd you leave Wall Street or Chicago, or whatever, like that?" It's those type of people. It's gross. I can have half of me be that as a portfolio manager. The other half of me wears a flight suit as an American and thinks that's just kind of an awful thing to say. But anyway, I was right. Said we're not gonna go through this 50-day moving average. We're gonna bounce off of it, and we're gonna head higher. So pretty happy with that call. The Goldman Sachs trade from the primary live trade brief. If you held it through today, the 827.5. 830 bull put spread, you'd be looking at a $1,400 profit in a week and a half. I rolled mine out the next week, and it's looking great. I told you Goldman Sachs and JP Morgan were gifts on this pullback. I said double up with whatever the hell you need to do, man. They're gifts down here. If the financials pull back at all, it's BTFD, and it is, and like it. So make sure you watch today's sit rep. I cover a lot of this stuff. I don't want to redo a sit rep in front of our Urgent Alert video. Real quick, though, I'm going to start covering, obviously, I don't send out alerts on trades I'm not filled on. I just don't monitor them, but I mean, I monitor the stocks. Obviously, I've been an Amazon guy for ages. You guys know that. Let me get a hell yeah if you're up about $2,200 on your Amazon trade. So I sent this out, 16 March? When was this? March 16th. Here's this Amazon bull put spread, the 842.5 bull put spread, risking $5,200 to make $2,300 by next Friday. I think this trade's up about $2,000 ish right now, just shy of $2,000. I'd be closing this trade right now. Nice $2,000 bagger in 2 weeks. So the 16th, it's the 30th, 16, 14. That's 2 weeks. 2 weeks, $2,000. Very nice. So give me a hell yeah out of your Urgent Alert model portfolio if you're liking that Amazon trade. Nice. Love this. This is what these fangs do. This is an Apple move. Up, sideways. That's that earnings pullback, whatever. As soon as that thing imploded on earnings, I said what? BTFD. Sideways and then up. Great looking chart on Amazon. I'm not going to step in front of that thing right now. If anything, remember, if something's on a tear, either get out of the way or grab onto it and go with it. So happy with a lot of you with your Amazon trade there. I'm not. I didn't get in it. All right, Disney. You guys know how I feel about Disney. Love it. This chart's the gift that keeps on giving. It is on a nice, gentle climb schedule of late. And then this from the bottom is a tear. Of course, only jerks at cocktail parties in South Florida tell you they got in right here. I didn't. I got in as it was sliding downhill right around there. And, just like ExxonMobil in the primary live trade brief, people are like, oh my God, it's, 52-week lows. Can it go lower? Of course it can. But if you're getting in the thing at around a 52-week low and it says Disney or an Exxon, if you don't think it's going to come back or go higher, don't get in it. I absolutely thought Disney was going to do all of this. I didn't think this performance was going to be like that, man. Or that's the sell the house and kids and load the boat. So this is great. Love it. This is a yes, even though it has come a long way to add or put a Jan 19 on. This trade is up $6,500 right now. And it is the 10 Jan 1870 calls and 80 disaster puts. Remember last week when I was trying to vacation and the market imploded, I said, hey, I'm not putting on any front month calls because why? I think it'll be a Brexit. Nobody cares about healthcare. I didn't say it like the CIO did, but that's kind of, you guys could tell what I was feeling. I'm like, okay, even if it implodes, it's on to the next thing. And Trump's already burning he's already putting out like, hey, you guys need to get on board because if you guys don't, I'm going to come after you, like personally, and make sure you lose your next campaign. So here he comes. Here comes the art of the deal. So I'm going to go out. Let's go out a little further in time. I'm letting the leash out a little bit on my front month upside calls. Let's go out to the 115s. That's $2. 2 weeks, $2, $1 a week. Nice little. That's continuing that gentle climb schedule. So let's sell I'm selling 10. Why does it say one contract? And it's $350, folks. I'm going to sell 10 of the April 13th 115 calls, right? Selling front month upside calls, bringing in potentially $350 and bringing this trade, even if Disney stays flat, to over about, or maybe about $7,000. This is what we do, man. Even if Disney just sits here, it's up 6,500. You bring in another $350. Ka-ching, ka-ching, ka-ching. Love it, love it, love it. FXI. So I'm short. I have two FXI trades, and since they're ungrouped, it's kind of hard to show. I'm short 25 since I have 10 and 15, two trades with 25 contracts of the March 31st. That's tomorrow's 40 and a half calls. Now, obviously, they're looking pretty good. They're up $325. There's only 25 bucks left in them. I don't think we're going to squeeze that out of it. So we talked about in the PLT about the choppy trade in the FXI, but how the PBOC is finding its form of capitalism, looking pretty good. I like this 39 and a half, this chop here after the little bit of the pullback on the week data. 39 and a half's up there. Let's go out a little further in time. Let's roll these. So we're going to roll these down and out. So hit close adjust. I'm going to hit roll down and out, and then I'll show you what the two trades are, obviously, but I'm managing the front calls here first. Buy to close 25 of tomorrow's 40 and a half calls. Sell to hope in, let's go a little further out, the April 13th. 39 and a halves are aggressive. The 40s are a little safer. I'm going with the 39 and a halves. And let's see what that roll can bring us. So we're already made $325. Add that, that's 500. That would be $800 in just under a month. Nice work. $800 times 12 months, potentially. Do the math. And that's even with the FXI not going up. That's why I love these trades, guys. Here's my Jan 18 trade right here. I'm long the 32 calls, 26 puts, disaster puts. That's up about $1,200. And then this one, I believe, is synthetic stock. It's up $2,600. Let's take a look. No, this is a long call diagonal as well. Let me just make sure I didn't have that backwards. No, that's right. This is both long call diagonals. Wrong portfolio. Good. Got portfolio on the brain, man. Is it Friday yet? But both good trades. You know my strategic mindset on China. Hopefully there's not a shooting war. Hopefully they can sit on Uncle Kim, cream of some young guy, and he doesn't light off a nuke bottle rocket. Then we're in trouble. Told you folks, JP Morgan, Goldman Sachs, gifts. JP Morgan, gift below 90, get in it. So there's the implosion. Oh my God, if he can't do healthcare, he can't do anything. Here's me saying that's a dumb way to think. Thanks, liberals in the mainstream media. Just like the election, I'm not going to believe you. I'm going to believe me. And there it is. There's your pop. Told you, below 90. It's a gift. Here we come back up. This ain't a dead cat bounce, folks. This is the financials are back. We know Steve Mnuchin can gut Frankendodd on his own. He doesn't need Congress to pass anything. He can do whatever he wants with that regulation, and he's gutting it. So this was an excuse to take some profit and some financials. Some of you guys did that in your Goldman Sachs, your JP Morgans, and now it's getting back on the horse. So I'm more of I like the way some of you actively manage that with these long call. I know. Okay, if it pulled back more, I would have went to town, but love passing on you. So this one's back up to about 26 grand. The 10 of the Jan 18, 40, 42 and a half calls and puts. And then here's the one I put on a couple months ago. I think this is 2 months old, 3 months old. So almost averaging about 3 grand-ish in this trade per month. This is the newer one, the Jan 19, which some of the new folks might be in. Hello. 10 of the Jan 19, 60 calls and 65 puts. So we have 20 of these short calls. And remember, I didn't put on any last week because I thought this would happen. Remember, implosion. I'm like, I'm not going to ride these down because I think we're going to get a snapback rally. Again, I said this, I've been saying this for 2 weeks. BTFD. Write that one down. Buy the frigging dip. Okay, and we will. So this is a little bit of a tear, which, you know, I don't want to break my own SOP, but I'm going to look up here at the 90s because this implosion point will be resistance here. If it can get through 90 with airspeed, put on the rally flag, man. I'd be looking at, we might talk about a Goldman Sachs bull put spread. I have that one in the, we might look at JP Morgan. Let's get our short calls on first. So 20 of them, options. Let's go out to April 13th. couple weeks, $2. 20 of them. Might go a little higher just to give us a little bit of airspeed. I mean, this is the nice premium that you bring on these trades. Look at this. It's $1,400, isn't it? $1,400. Let's just be a little bit more concerned. Let's do the 90.5, just above the 90. So we give us, oh, this is good. If it hits 90 with airspeed, we got a 50-cent little cushion here to see if it does. If support becomes resistance, resistance becomes support, all that stuff. I'm going to sell 20 of the 90.5. I'm going to give myself 50-cent cushion. It's over $1,000 in 2 weeks, making what, $600 a week potentially. Love those trades. SPX guys, the hedges are in here. I set them and forget them. Good question the other day in the PLTB. Do you manage these? Yeah, you could roll them up. You could, to keep, if maybe roll them up to put them under the 50-day moving averages. With debit spread, if I do tend to roll, folks, I hardly ever roll. If I was wrong in my mindset, I either get out or whatever. For whatever reason, I should have stuck to my guns. I didn't want to roll that Goldman Sachs bull put spread. I had a feeling by Friday we'd be doing this. And I told you in the PLTB that all Goldman had to do was sneeze to get above 230, and they sneezed, and they're up at 231 today. So if you're in that bull put spread on Goldman Sachs, you're looking at max profit today. I rolled mine out to Friday. Need to listen to myself here. But I don't tend to roll debit spread hedges. I set it and forget it. This is my USAA bill, folks. I really don't care about it. Okay, so I'm not even going to cover those. But if you want to actively manage these, do it. Roll them up. You're almost going to be losing. Long discussion. We'll talk about this in Miami. This is going to be one of my topics there. Big topic on hedging. Speaking of Miami, folks, I don't know if we're all out of the Diamond tickets, which is the Saturday dinner. We added a guest speaker coming from the Blue Angels. You need to go.topgunoptions.com/Miami-event. Okay, or at least go to our Facebook page on Top Gun and let us know that you're interested. Okay, I pinned the topic at the top, so you should be able to. Where is it? Right here. Click interested, man, if you're interested in going, because I want to make sure we get the crowd. All the people who did all the talking here. We had 5 going, 9 interested. I know John Thomas has a bunch. I know people will wait until we get closer. Remember, folks, these prices double within 30 days of the event. So the early bird pricing now for $9.99 is the Diamond level, and that's the full Monty, man. So it'll be $1,600 if you wait until 2 weeks before the event. Sorry. So, all right. Don't want to take too much time on that, but at least let me know you're interested in going, folks, on the thing. Let's get back to trading here. Sorry. So XLF, I feel the same way about this that I do in my urgent alert. It's flat. I don't like it. The commit criteria and strategic mindset are still valid in the trade, obviously. 17 puts, 18 calls in the Gen 18. I'd be putting this capital to work in Goldman Sachs, JP Morgan, and AIG. Okay? So I'll tell you what, once I get this to above $45 down, I'm going to get out of this. They're just not doing anything for me. Options, 15 of them. I looked at the XLF chart. I know exactly what it looks like. It looks like the financials. GIF through 90, JP Morgan, and there's your bounce. So it really is doubled up here. There's a little bit more. There's less single stock risk. There is no single stock risk in the XLF. JP Morgan goes to zero because Jamie Dimon turns out to be the Antichrist or something. XLF will take a hit, but obviously JP Morgan's going to zero. So you get a little bit more safety with the XLF, but it's really not doing anything for me, man. So 15 contracts. You got to go essentially at the money here, out 2 weeks to see any premium. 8 cents in the 24.5, really? Yeah, is this even worth $45? So if you're in the XLF, guys, I can't tell you what to do. Obviously, you shouldn't be trading real capital. $105. So there you go. You're getting to watch what I'm doing, and I'm telling you what I'm doing, which is, So I have a choice. How much time do I have? I like an SPX bull put spread. I like doing these a couple weeks out in this portfolio, but I also wanted to look at a Goldman Sachs. I'd be looking at a Goldman Sachs or a JP Morgan bull put spread. I told you I liked the other day. I liked the 50-day moving average, and that remember that 23.60-65 line. You've heard me saying it for weeks. That was really the Maginot Line or something. Where'd that come from? World War II. Right there. Bounce off it. Bounce off it. Smash through it. And we're kind of drifting up through it right now. So let's go underneath it down to this chop and out a couple weeks. So my strategic mindset, step one, you should have your checklist out at all times whenever you're listening to me trade or whatever. If I don't physically go through each step, then call me on it, because I want to make sure we are doing things properly. All right, so, and why aren't we getting options in here? I'll go out to that April, just to keep where all my other ones are. Remember, hell, we're going to have, it's the 14th. 1, 2, 3. What does it say? April 13th. Thursday, but that's not regular expiration. Regular expiration is the 21st. 1, 2, 3. April 17th, those are Monday options. 19th, Wednesdays. April 13th isn't a Wednesday. That's weird. Oh, I think those are quarterly options, Wiz, aren't they? Let's go out to this one. Well, those are the Wednesdays. If I got the regular, let's look at the regular expiration. I haven't gone out, and it looks like a lot of strikes, or expirations. Remember, folks, there are Mondays, Wednesdays, and Fridays in here. But let's go to that. Let's give ourselves some big cushion here. This is like a Warren Buffett trade. I think we go up, man. Now, I have to do this because I have to scare the shit out of you every once in a while. That's what fighter pilots and options traders do. Let's scare the hell out of each other. And if our max risk isn't hit, then you do it. Out here in this white space is Iran, North Korea, Russia crap, which obviously you're not going to hear on the news, only bad. And then Trump not being able to get taxes passed. In the next, that would be month-ish, we're going to know if the guys, they're already gutting Frankendodd. I read it. I talked to people, a lot of, rubbed elbows with people last week. They put their pants on the same way we do, by the way, folks. Nothing super about anybody else. We're just as special as all those other people, but everybody, seemed to agree. The Aspen crowd was definitely the let them eat cake. Whoever that hedge fund guy was that said that, he just said what everybody's thinking, all the rich are thinking, and don't care about it. So let's go out to, let me do the 50-45. There you go, for $1.35. Perfect. Man, we don't throw darts, do we? But as I'm talking through stuff, man, they land in the bullseye. I'm going to sell 15 of the regular April expiration 2350s. Remember, folks, for us mere mortals, the last day to trade, to get out of, to manage that trade would be what? If this is expiration, the 21st, the last day to trade this would be the 20th for us to get out of it by the closing bell. Because at the sound of the opening bell on the 21st, this trade settles when all 500 stocks have their first print. So if you don't get out of it, you're at the luck of the overnight gods, which I have a couple times in my career left one, or I didn't leave it on purpose. I'm trying to manage it, and I'm like, ding, I'm like, crap. Anecdotally, I'll say half the time it's worked out. The overnight guides have been great, and the other half of the time it's China reported XYZ and the market implodes and my bull put spread gets hammered. Don't be a luck guy. $1.35 is great, plus or minus 15 cents. Max profit is 0. Sell 15 of the April 17th 2350 puts. Buy 15 of the 2345s for $1.35. Okay, Trade Monster, really? Let's just do math the old way. 15 times $1.35 equals $2,000. This is about $5,000 in risk for a $2,000 gain, and it just went down to 20 cents. Well, that sucks. I wanted $1.35. Why aren't the metrics working? Did I not push mid-market? So at $1.35, not $1.20, it was, well, I'll show you. Let's see if I was pretty damn close. I want to make sure my mental math is working. So at $1.35, it was 20.25. Our calculator was right. Risking 55 to make 2, but what did I say? Plus or minus? All right, well, I guess it's $1.20 now. Dang it. I'm not going to have time, guys, since I got a lot of winded, but I would be looking for this portfolio, a JP Morgan bull put spread right there around that 85 SPX 330. And again, like the Amazon trade that a lot of you were happy with. I saw in the PLTB or AR, even some of you that are in accelerated retirement are like, hey man, nice Amazon trade. I was like, ah, crap. That's right, you guys. So those people are going to have a good weekend. File, save as, SPX, 330 metric. Okay. So risk in 57 to potentially make 1800 at the money vol, 68%. Remember, at the money vol means as soon as I just said it, which is in the past, but it's still there. Break even 69%. So it's a pretty high probability trade. But again, folks, this isn't taking into account. I'd only do 10 cents from here too. I'd go down to $1.10 or up to $1.30 now. I wouldn't chase this below $1.10. Too much, not enough risk to reward for me. Okay. The adjust would be $2 and the eject would be $2.40. Okay, so I like this bull put spread. Throwing my leash a little further out there, but this is what I used to do in the quote old days. Okay, do I expect the S&P to maybe pull back in this and see some choppy waters? Yeah, that's why I told you I am cautiously bullish, but I don't expect another one of those. And if it is, it's going to be bad. Okay, it'll be the white space: North Korea, Russia, Trump, Iran, or some unforeseen macro event. I mean, hell, man, when Theresa May signed the Brexit thing yesterday, I think it was a story on B20 of the Wall Street Journal. Brexit, oh my God, world's ending over here. I'm like, no, it's not. BTFD. So I think we're good. All right, I need to send out the text alert through our broadcaster over here, so I will do that now. You don't have to watch me do that. And we're looking pretty good. Love the urgent alert portfolio, guys. It's doing very, very well year to date. Doing a hell of a lot better than the PLTB. There's a lot of chop in there. Urgent alert. Yeah. All right. I'll let you guys go, though, so you don't have to watch me do this. All right, guys. I got to go. Remember, grab your Miami slot, folks, even if you're interested, but you're not really willing to commit there. At least hit interested on the Facebook page, so at least we can get the word out to maybe some potential new folks. Have the another potential full throttle course coming up in April. I think I'm going to teach this one just to move it around a little bit. I'm going to maybe teach this one. So, and remember, if you're currently a full throttle, folks, you for all eternity that you're a member in good standing here at TGO, you get access to all the training that we do in a full throttle. So I'll take a look at my schedule. I'll talk to Doug, and maybe I'll do the training on this one. All right, guys, I got to run. Have a great rest of your day. Happy hunting. Make sure you hedge. I'll be back with Friday's market wrap up tomorrow. So I'll see you guys later.